Hi there, this is Tim Clairmont. Welcome to Clear Money Talk, where we turn complex financial problems into clear, practical insights.
And I'm Tyler Andrews. Welcome to the show. Today we got another fun one for all of you listeners. Tim, the topic of our day is, what's the difference between being wealthy and feeling wealthy?
Ooh, what a cool topic. Oh my gosh. I'm excited about that. What's the difference between being wealthy and feeling wealthy?
Yeah.
What a fun subjective exploration topic. I mean, it is subjective, I would say, in the sense that feeling wealthy is it's a feeling. And any kind of feeling, it's hard for me to impose and say, this is what, everybody should feel like. It's not in my nature. Everybody, I think, has their own experience of things. But I can certainly speak from my own personal experience as well as a lot of the experiences of clients that I've worked with. And being wealthy is potentially a little bit more objective. So why don't we start with the more objective one, being wealthy? I think that's there's a lot of different ways to delineate that. You could go to your favorite LLM, ChatGPT, Claude, whatever, Microsoft Copilot, all the different choices, or go to something like Perplexity or Google and ask very specifically, what is the threshold for the top 10% of net worth individuals in the United States, or what is the threshold for the top 10% of net worth individuals in the world? And you could focus on 5% or 1%, wherever you want to arbitrarily draw that line to say, well, I think that's wealthy. That's the subjective part of the objective analysis. So being wealthy, I guess in today's day and age, I think most people would probably say if you had $1 million or more, you're probably considered wealthy. Even though $1 million in 2026, when we're recording this, certainly doesn't buy what $1 million bought in 2000 or what $1 million bought in 1976 when I was born because of inflation. When you look at the history of being a millionaire was clearly wealthy in the past. I don't know if it is really wealthy today, given that the $1 million just doesn't go as far as it used to. But that's probably a reasonable line. And then you could simply ask the question of, okay, how many millionaires are there in the United States, and what percentage of the overall population does that represent? Or you could ask the same question at a global level and start to get objectively analytical on wealthy. But regardless of the answers to that, at the end of the day, feeling wealthy, I think, is a huge difference. There are a lot of people that are worth 5 million, 10 million, even 100 million. I bet there's billionaires that don't feel wealthy. And as strange as that might seem to so many people, it's true. It's the reality. And I'm happy to speak towards that mental clarity as it relates to feeling wealthy as well, because I think you can actually feel wealthy with a lot less than $1 million. And I think you can not feel wealthy having hundreds of millions of dollars or even billions of dollars. And that differential is probably worth discussion.
Yeah, well said. You hit it spot on, kind of with where I wanted this topic to lead us, Tim, is that
Cool.
There's this unique dichotomy between being wealthy and feeling wealthy. I mean, we work with a lot of clients who on paper you would think are very wealthy, yet they still feel very uneasy when it comes to money. And then we work with a lot of clients on the flip side that maybe on paper don't have a lot of means, but they are extremely comfortable. They sleep very soundly at night. And if you ask them, they would say that they're wealthy, because wealth isn't always just about numbers. It's kind of the relationship between you, your resources, and how you use your money to accomplish different things within your life. So yeah, I think it'll be fun to talk about those things, what we've seen over the years. And
I think this is an excellent concept. As I'm thinking about this, I'm envisioning, let me give you two concrete examples, because this can feel very esoteric and very out there in terms of discussion. I'm going to be very specific with you. So I'm going to articulate to you a real life couple that, obviously not using their real names, but that we've seen this multiple times, where they do not have a lot of wealth, and they would probably not be considered wealthy by most people's definition of wealth. They're not millionaires, but they feel extremely wealthy, and I'll talk to you about that. And then I'm going to give you another example of people who actually have a significant amount of wealth, let's say $3 million or more of assets invested with our firm, who still don't quite feel wealthy. And I can explain a little bit into the insights into where they might be. So let me go through these two very specific examples.
Please.
So, all right. So let's hit the $3 million person first. So they've got $3 million. They're maybe in their mid 50s. We certainly have clients like that. And their concern is they're accustomed to a certain income level. their income level that they live on is probably somewhere between $300,000 and $500,000 per year. Now, they might be saving $25,000 to $75,000 a year, maybe even $100,000 a year towards their investment portfolio, and living on the leftovers. But that leftover amount is still a big number. It's still somewhere between $250,000 and $400,000. And if they're going to retire on $3 million and they're not really counting on getting a lot from Social Security, they don't have any kind of pension in place, a $3 million portfolio, according to the 4% rule, under a normal investment approach, would generate about $120,000 per year. So if they do some math and they look at their situation, they might say, man, I'm going to have 120 from this, maybe another 30 or 40 from Social Security. So I'm sitting on $150,000, $160,000 per year, and I'm used to living on 300. That's going to be a massive pay cut. They don't feel wealthy because they can see down the road their pay cut is coming as soon as they retire. And if they don't have enough money to build that up to offset that pay cut, then they're going to have to tighten the belt and have a lesser lifestyle or work longer in their current circumstance. And that might be hard to relate to for people who are not used to living on $250,000 or $300,000 per year. I respect that. But you can get used to a lifestyle at any level. And whether you live a lifestyle of $50,000 a year or $150,000 a year or $500,000 per year, it still becomes your own norm. And when you're evaluating your norm and are you going to be able to maintain that same norm for the rest of your life, that definitely changes your feelings of wealthy. And when you think about inflation and how long we're all living nowadays, I mean, I'm shooting for 200 years old. That's what I've said, or longer. I'm hoping that we get there with the medical technology and other opportunities that are coming our way. But the point is, if you retire at 60 or 65 and you have another 30, 40, maybe 50 or longer years ahead of you, you've got to factor in inflation. And if your income is coming in at a level capacity, even at a level that you feel comfortable with, you could still feel not wealthy enough because you're thinking you're going to live a long time and you haven't built in a plan to increase that income and have it escalate for you down the road. So that's just an example of a client who may be perceptively, most people's definition, wealthy, but in reality, I would argue there are a lot of people like that don't feel wealthy. Admittedly, we can alter their plans significantly, I think, to improve the likelihood that they'll feel wealthy, but that's not an uncommon scenario as far as our clients that we work with.
Mm-hmm. Sure.
Fair?
Yeah, absolutely fair. I think real world examples are some of the best teaching tools and things that we can relate with. So I love that you shared that. I know you said that you wanted to share the flip side where we have a client maybe that on paper isn't super wealthy by normal standards, but they feel differently.
Yeah,
let's share that.
Yeah, let's hit that. So,
okay.
So I want you to think about a married couple that has served in their whole working years, typically in a public position, so like a teacher or a firefighter or a police officer, or perhaps another form of government employee. Could be a federal government position. And these individuals may not have saved a whole lot of money, but they have a very large pension. And they're sitting with a pension coming in to the tune of anywhere, I've seen pensions anywhere from $125,000 to $200,000 a year of pensions that also may have cost of living adjustments built in. They have, $150,000, $200,000 a year plus Social Security on top of that, and they have cost of living adjustments inherently built into their situation. Now, they may only own their house, and they may only have, $50,000 in savings, and they may be spending every single dime that comes in out of those big pensions, but they feel wealthy because they don't have to worry about where their paycheck's going to come from for the rest of their lives. It's guaranteed by a pension, and that totally changes the way people feel, even though they may not even be millionaires. If something were to happen to the both of them, the heirs that they may have, or may not have for that matter, are not likely to inherit $1 million if the value of their home is less than $1 million, even if it's paid off. And on the other hand, it's possible they have a mortgage on their home because they can afford it with the pensions that are coming in. So the equity in their home, the value of the home versus the mortgage that they have, they may not leave a lot of money behind. Now, again, if it becomes a priority to leave money behind, we can help them design a plan that does that. But objectively, they would not hit the standards of even millionaire level in terms of an objective definition of whether they are wealthy or aren't wealthy. But in reality, they feel quite fine.
I think you hit it perfectly on the nose, which is where I wanted this to go, Tim. So thank you for saying that. Is that wealth is not a number; it's a feeling, right? It's an emotion. It's being comfortable with where you're at and where you're going, and aligning your money and your income with your desires, your passions, and being able to sleep soundly at night. So I think that is brilliant that you talked about that naturally. We didn't plan that either. So
I never know the topics
that
when we
worked
start
out.
this stuff. So
That worked out
Yeah.
awesome, Tim.
Oh, that's great.
Thank you for sharing those
Well,
examples.
yeah.
I would love to talk about maybe what people think wealth is.
Yeah, sure.
And we could talk through that, and we can maybe then talk about what actually creates the feeling of wealth, at least with our experience and talking with many different people over a lot of years and seeing what actually makes people feel wealthy at the end of the day. Sound good, Tim?
Yeah, it sounds great.
Okay.
Go for it.
So a lot of people think that wealth is, the common assumptions is net worth. What does your personal financial statement say about your situation from a numbers standpoint? Income, as we were talking about. Income can be a large driver. Somebody could have a large income or a large pension or be a very high earner, but they don't have a lot of assets on paper, but they still feel wealthy. Lifestyle could also be a wealth factor. Maybe you don't have a lot of assets or income, but you have this lifestyle that you inherited or you otherwise are able to just to lead naturally that makes you feel wealthy because that's your true vision of happiness. Also what others see, I think, in this world where everything is in front of us with social media, keeping up with the Joneses, if you will. It's what other people perceive of you, and if you're able to build a lifestyle that looks great to others and that makes you feel good, that might make you feel wealthy. But is that true wealth? Let's talk through that, Tim.
Yeah.
So some of the things that we have seen that actually can create the feeling of true wealth is margin. What I say by margin is, time, money, and energy, right? Some of the most limited resources we have is your time. If you spend a minute doing something, that minute's gone forever.
Yeah.
Money, same thing with money. Another very limited resource. If you spend $1 on something, can't get that dollar back. You got to go earn another dollar. And that comes back to the whole time equation that we were just talking about too. And also energy, energy and your motivation to do more and be energized and motivated to do those things is so we don't give enough weight to, I feel like, quite often in our lives.
Yeah.
So,
Well, and one of the things that you didn't mention in the list that I
Please.
feel like plays into this, health. It's hard to feel wealthy when you're unhealthy. And that's it's just a tough reality. If you ever meet a person who's really sick, they would trade a lot of wealth to just have another day of health. And that's something to factor in too. So that the better off you can take care of yourself and hopefully handle whatever comes your way, health-wise, I think that can improve your chances of feeling wealthy. And that's important because that wealth is, again, that subjective feeling. So yeah, your health does play into it. You talked about what other people see, and you also talked about sort of your own spending habits. And I think those are two excellent concepts. I will say that I have a lot of clients who feel wealthy because they know they have a certain amount of income that's going to come in for the rest of their lives in retirement, and they've set their lifestyle at an expense level that's lower than that income. We always say, they have to learn never to spend more than their paycheck. That's the first lesson that we want to make sure all of our clients learn, regardless of what level they're at. We try to give them the biggest paychecks they can have, and ultimately just make sure that they spend less than their paycheck. So that's typically a focus that we'll have with working with our clients. If you're spending on average 70 to 80% of your paycheck, wherever your paycheck's at, you probably feel wealthy, especially if you have confidence that that paycheck's going to keep coming in for the rest of your life, and if you have confidence that it's going to keep up with inflation. So have confidence in your future income stream, that it's going to keep coming in no matter what. Have confidence that your income's going to adjust for inflation and continue to increase over time, and then make sure your spending habits stay at that 70 to 80% of your income level. That's probably the recipe for feeling the most wealthy that you could possibly feel.
100%. Couldn't agree more with that, Tim. I think lifestyle creep is a huge one. The phrase that many people use is it's not how much you make, it's how much you keep at the end of the day, whether you're losing a bunch of your income to taxes or you're just blowing it and you don't have anything to show for it, right? So the guy who's making $1 million a year but saves 2 pennies on a ball of lint versus the guy that's making $50K a year but he saves the majority of it, who's actually making progress and getting ahead as far as financials are concerned? I'm not going to answer that. You can answer that yourself. But lifestyle creep is so huge why people don't feel wealthy. Social media comparisons is another one. Anything you see on social media makes you feel poor inherently because everybody on social media is like driving a Lamborghini and
they're always posting their
amazing
best
vacations. And that's a very, very small percentage of the actual population in our country and frankly globally too. So you have to be able to take it with a grain of salt, right?
Yeah, it's funny. I think of my wife Crystal, and she enjoys the reality shows. I think there's a lot of friends that I have that enjoy the reality shows. And when you look at the reality shows, it's really showing the real life of very abnormal people. Those are not common people. Those people, whether it's behavior, whether it's life circumstance, or whether it's the wealth that they've accumulated, the amount of money they're able to spend on a regular basis, that's not normal. And hence the reality of their not normal lives, it becomes a lens through which we might judge ourselves. And if you're judging yourself based on these abnormal lives that you're seeing on a regular basis and you're interpreting those as reality, even in a more minimalistic capacity, if you just look at your social media and look at what your friends and your schoolmates and maybe even family members might be accomplishing because they're showing you the good stuff and only the good stuff, everybody's got bad stuff. Everybody's got stuff that makes their lives hard. Even those people on the reality shows, they're editing that stuff out to some degree. They're having some bad stuff that we don't all get to see. And that's just it's life. It's what we all have to deal with. So figure out what feeling wealthy feels like for you, because that's what it matters. That's what matters at the end of the day. Our mission is we empower our clients and associates in their journey to achieve their unique vision of happiness. And everybody's got a unique vision of happiness, and hence their own definition of what feeling wealthy means.
Yeah. And that naturally leads us to what I really wanted to talk about, Tim. Well, all of this I want to talk about. All this is extremely important. But
go for it.
One of the biggest reasons, from my experience, from what I see, what I've learned over the years, from why some people feel very wealthy and some people don't feel wealthy at all, even though they might have a lot of means on paper, is that they have lack of structure with their money and lack of clarity with their money. So the person, in an example, that has $1 billion but has no idea how all of their pennies and dimes and quarters and dollars add up to build their vision of happiness, what's used for this purpose and this purpose and this purpose, they're just accumulating and socking money away, but there's no real driver behind the why, versus the person that maybe has $50,000, but they know exactly how every penny is allocated, exactly what each of those pennies is going to do for them short-term and long-term. That's where real clarity comes into play when it comes to money. And I think we've hit on that, but it's probably worth talking about it at least a little bit longer, because I mean, we see this so often with clients. They'll come in, they'll have all these different buckets of money, different tax qualifications, retirement accounts, inheritances, expected money in the future, bonuses, income, all these different things, and they're like, I don't feel wealthy, but I got a lot. And
I feel like a bobblehead right now.
Yeah.
No, everything he's saying is like, you're so correct.
And money can be so overwhelming. But if you can figure out how all of it aligns to achieve your goals, that's where the wealth comes from, and then you can really have peace of mind.
That's right. Clarity and a good plan can give you a ton of peace of mind when you understand what the purpose of money is for. And there are finite uses of money. It's not infinite. There's not this infinite number of uses of money. And we help our clients really get better clarity on that through educating them with our clock presentation. So something we've designed, invented 15 years ago. We use regularly with clients. Other advisors are using it all over the world at this time. It's been so helpful to give clarity around what do you spend your money on. And everything has a purpose at the end of the day. You just may not have defined it yet. And that's something that we help our clients do very quickly, and it gives them a lot of peace of mind, pretty much right away in our first couple appointments. But as far as I'm thinking about, there is another example of a client who comes to mind that may not feel wealthy, even though they have that extra income, even though they're spending less than what that income is that's coming in, and it is from the psychological ingrained behavior that they've been raised on throughout their entire lives to spend so frugally and save so aggressively. And those people are often our clients. In fact, we'll often say on a scale of 1 to 10, 10 being a person who can't keep a nickel in their pocket, 1 being a person who, pardon the visual, but will recycle their dental floss. Everybody's somewhere on that spectrum. And most of our clients are somewhere between a 2 and a 4. Why are they between a 2 and a 4? Because that's how they saved up money, and then they needed somebody to help them invest it, and that's what we do. If a client's between a 6 and a 9, odds are they don't have a lot of money to invest because they're spending more than they have, and they're struggling to build wealth. But even once we've designed a clear plan for our client, to give them the clarity, give them the knowledge that they're going to be okay, that they're going to have enough income coming in. We factored in the inflation adjustments, that you can see their future paychecks are coming in. They still struggle to spend money. They still are trained and ingrained at this 2 to 4 number on that scale of 1 to 10. And one of my favorite things that I get to do is have conversations with those clients and say, it's okay. It's okay to spend more. Every asset you have is a live on or leave on asset. Either you're going to spend it or somebody else is going to get it and they're going to spend it. And that is a hard truth. And if it's your desire to enjoy the fruits of your labor and you're just fear-ridden and that's what's stopping you, you're just going to leave a whole bunch more money behind. Now, if you want to leave a bunch of money behind, that's great. We can help you do that. We can help you do that tax efficiently and all kinds of stuff. But if at the end of the day, you're just not spending because you're afraid that bad things are going to happen and you're not going to have the money, we can build a plan that gets you so dialed that you don't have to worry about that. And then I love it when I get to see a client who's in that 2 to 4 range go to a 3 to 5 or even go to a 4 to 6. I don't need you to become an 8 or a 9, that's fine. But moving a couple points up that scale, you can go from feeling not very wealthy because that's how you were raised and that's how you've become to be, to feeling pretty darn good because you can spend money on things that you never would have thought you could have spent money on.
That's a mic drop situation right there. That was so well said. If I had to summarize a lot of what Tim and I have talked about, it's that a lot of people don't need more money. What they do need is more space. They need more clarity and also maybe not moving the goalposts so frequently, which a lot of people do. I'm guilty of that. I move the goalposts all the time, right? It's about the journey, not the destination. I get to that destination, the goalposts are moving forward. Is that healthy? Maybe. Depends who you ask and how you're moving them. For a lot of people, it's not. And figuring out where those goalposts need to stay, so that way you can actually get to that point and feel comforted with where you're at and what you've done, I think is huge. And that's what a lot of us are striving for. So.
Yeah. Well, that's good. I feel like we've explored this fairly thoroughly. I know we can unpack it for a long period of time, but out of respect for your minutes, the limited resource we have, I think it's a good place for us to stop. We do need to do the just the answer, though, for those other individuals who choose to listen to the short version of this and don't get all the wonderful insights that we've just unpacked and shared with you in the longer version. So for you who've listened to the longer version, thank you. Thank you for your minutes. I hope you found them worthwhile. And make sure you subscribe to Clear Money Talk so we can continue to grow our presence and impact more people.
That's right.
But as far as the just the answer, Tyler, how do you want to handle this?
Let's reiterate the topic, and then we can maybe go back and forth, you and I, Tim, and
Sure.
talk about what we talked about in the big podcast episode. So Tim and I talked about what's the difference between being wealthy and feeling wealthy. They're not quite the same. They're not one and the same. They're not equal. We've worked with a lot of people who on paper look very wealthy, but they feel very uneasy with money at the end of the day. We work with a lot of people that on paper don't have a lot of means, but they would say that they feel extremely wealthy. And that dichotomy relationship is important to unpack, which we did in the full episode. We'll go through some of the hit points here with you briefly, just so you can get the summarized version and hopefully have some good takeaways. So,
Sure.
Tim, you had some great examples during the full podcast. I think it's worth going and listening to those as far as different examples of real world situations where one person doesn't feel wealthy, but they look wealthy, and one person feels extremely wealthy, but they don't look that wealthy. And it's important to unpack those and listen to it. But one of the things we did talk about what people think wealth is. So a lot of people think wealth is net worth, it's income, it's lifestyle, it's what other people see. What truly creates the most feeling of wealth from our experiences, margins. So time and money, energy, health is a big one. Having clarity and predictability within your money and your broader financial plan is really what creates the feeling of wealth with our experience. And a lot of people don't feel wealthy for a lot of different reasons. Some of the most noteworthy ones being lifestyle creep, social media comparisons, money without structure and money without clarity is so important. We unpack that in the full version of the episode where if you don't know what your money's doing for you now and what it's going to do for you in the future, that creates a sense of uneasiness, which makes it hard to feel wealthy and be happy with where you're at currently. So if you know what your money's doing for you and what it'll eventually do in the future, having that clarity helps to bring a lot of peace to your situation.
Yep. I would just say in a quick nutshell, and I appreciate everything that
Please.
Tyler's just trying to pack into this just the answer, but the bottom line is have enough income coming in for the rest of your life that you have complete confidence that income will be there. have a plan for inflation so that that income is rising, and get used to living on 70 to 80% of that income. So you always have a delta between what you have coming in and what you're spending. That will be that, and then of course stay healthy. That will probably work together to generate a significant improvement in your feeling of wealth, no matter where you're at. You notice I didn't say anything about numbers in there. Doesn't matter whether your income's $50,000 a year or $500,000 per year. Whatever it is, have confidence it's going to come in for the rest of your life. Have a plan for inflation. Get used to living on 70 to 80% of whatever that amount is, and stay healthy.
Love it. Ready for some trivia?
Yeah, let's move on.
Let's do it.
Okay.
Okay, we're going to jump right in, Tim. Tell me, which group reports higher financial satisfaction on average? I got some options here for you.
Okay. So you higher satisfaction?
Yes.
Okay, got it.
Yes.
Okay.
Did I butcher that?
Yeah. That's okay.
We're
I
just gonna skip
I
right
felt like
over
you
that.
combined two words together, so it's all good. Higher satisfaction on average.
Higher financial satisfaction.
Financial
Yes.
satisfaction.
You
Got it.
Exactly.
Got it. Okay, great. What do you
Options. People with higher incomes,
got?
people with higher net worth,
Mm-hmm.
people who budget regularly, or people who actively track goals.
Ooh. Interesting. You see, the phraseology matters. So you said higher net worth. Okay, people who have higher net worth have more money right now. I don't think that's the right answer. We've already unpacked that a lot in our previous stuff. Higher incomes. We didn't say higher incomes with confidence that those incomes are going to continue for the rest of your life and that they're adjusted for inflation. Had we said that, I would have said that one probably would be the answer. But we just said higher incomes, and higher incomes can feel fleeting. Those who live on a budget, generally speaking, that might help as it relates to living on a budget, because you have a sense of exactly a clear plan as to where your money is going and where your money is coming from. So that could be the right answer. But also the last one, those who have goals and who track their goals, I think could also be the right answer as far as feeling the most satisfaction. I think for me, living on a budget just doesn't feel good. It's like living on a diet all the time. So I just, as a personal choice, I'm going to go with option 4. I'm going to say those who have goals and those who track their goals.
You are correct. People
Nice.
who actively track goals.
I got one right. It's been a while.
Higher financial. Yes, you did it. Nice.
Well done. All right, cool. I'll take
Very cool.
I'll take the little pat on the back. Thank you.
It
Thanks for that.
reframes wealth as awareness and intention, not accumulation, which is kind of the whole point of this podcast.
Yeah, it is. Well, let's bring it to a close
Yeah.
together. Thank you for joining us on Clear Money Talk. Hope that this has given you some new insights, and I hope that you continue to listen and tune in or watch us on YouTube or wherever you choose to learn all of this. Do we have a specific call to action today?
Yeah, I would say if you found value in the episode, or if you enjoy watching us, whatever your reason is for tuning in, consider subscribing and sharing it with a loved one, so that way they can also benefit from it. And like always, we just really appreciate the time you spent with us, and we look forward to spending more time with you at future episodes.
Thanks for joining us on Clear Money Talk.
Tim Clairmont and Tyler Andrews are investment advisor representatives offering securities and advisory services through Cetera Wealth Services, LLC, member FINRA SIPC. Advisory services offered through Cetera Investment Advisors, LLC, a registered investment advisor. Cetera is under separate ownership from any other named entity. The views depicted in this material are for information purposes only and are not necessarily those of Cetera Wealth Services, LLC. They should not be considered specific advice or recommendations for any individual. Cetera Wealth Services, LLC exclusively provides investment products and services through its representatives. Although Cetera does not provide tax or legal advice or supervise tax, accounting, or legal services, Cetera representatives may offer these services through their independent, outside business. This information is not intended as tax or legal advice. All investing involves risk, including the possible loss of principal. There is no assurance that any investment strategy will be successful. Examples referenced are hypothetical only and do not represent the actual performance of any particular investments. Converting from a traditional IRA to a Roth IRA is a taxable event. A Roth IRA offers tax-free withdrawals on taxable contributions. To qualify for the tax-free and penalty-free withdrawal or earnings, a Roth IRA must be in place for at least 5 tax years, and the distribution must take place after age 59.5 or due to death, disability, or a first-time home purchase, up to a $10,000 lifetime maximum. Depending on state law, Roth IRA distributions may be subject to state taxes. Distributions from traditional IRAs and employer-sponsored retirement plans are taxed as ordinary income and, if taken prior to reaching age 59.5, may be subject to an additional 10% IRS tax penalty. Investors should consider the investment objectives, risks and charges, and expenses of mutual funds and and ETFs carefully before investing. The prospectus, which contains this and other information about the funds and ETFs, can be obtained directly from the company or from your financial professional. The prospectus should be read carefully before investing or sending money. A diversified portfolio does not assure a profit or protect against loss in a declining market. Dollar cost averaging will not guarantee a profit or protect you from loss, but may reduce your average cost per share in a fluctuating market. Investors cannot invest directly in indexes. The performance of any index is not indicative of the performance of any investment and does not take into account the effects of inflation and the fees and expenses associated with investing. Although it is possible to have guaranteed income for life with a fixed annuity, there is no assurance that this income will keep up with inflation. There is a surrender charge imposed generally during the first 5 to 7 years or during the rate guarantee period. There is a surrender charge imposed generally during the first 5 to 7 years that you own the contract. Withdrawals prior to age 59.5 may result in a 10% IRS tax penalty in addition to any ordinary income tax. The guarantee of the annuity is backed by the financial strength of the underlying insurance company. Investment subaccount values will fluctuate with changes in market conditions, and investment in a variable annuity involves investment risk, including possible loss of principal. Variable annuities are designed for long-term investing. The contract, when redeemed, may be worth more or less than the total amount invested. Variable annuities are subject to insurance-related charges, including mortality and expense charges, administrative fees, and the expenses associated with the underlying sub-accounts. Investors should consider the investment objectives, risks, and charges and expenses of the variable annuity carefully before investing. The prospectus contains this and other information about the variable annuity. Contact Clear Financial Partners at info@clearfp.com or 503-579-1000 to obtain a prospectus, which should be read carefully before investing or sending money. The cost and availability of life insurance depend on factors such as age, health, and the type and amount of insurance purchased. Before implementing a strategy involving life insurance, it would be prudent to make sure that you are insurable by having the policy approved. As with most financial decisions, there are expenses associated with the purchase of life insurance. Policies commonly have mortality and expense charges. In addition, if a policy is surrendered prematurely, there may be surrender charges and income tax implications. The target date of a target date fund may be a useful starting point in selecting a fund, but investors should not rely solely on the date when choosing a fund or deciding to remain invested in one. Investors should consider funds asset allocation over the whole life of the fund. Often target date funds invest in other mutual funds, and fees may be charged by both the target date fund and the underlying mutual funds. The principal value of these funds is not guaranteed at any time, including at the target date. Cetera does not offer any direct investments, endorsements, or advice as it relates to Bitcoin or any other cryptocurrency. This is for informational purposes only. Bank certificate of deposits are insured by an agency of the federal government and offer a fixed rate of return, whereas both the principal and yield of investment securities will fluctuate with changes in market conditions. Clear Financial Partners is located at 15573 Bangui Road, Suite 100, Lake Oswego, Oregon 97035. For more information, please call us at 503-579-1000.